What's up, guys? Welcome back to Everyday Money. And yes, just as the title of the video says, I did sell my VTSAX holdings. I sold some of it, I sold a little part of it, and I can see you guys on the other side of the camera going, why? Why would you sell your VTSAX stock? I thought that this was I thought this was the best possible thing to invest in the stock market in. I thought that's what you've been saying for this entire time that you've had this channel. And those things are all correct. I do think it's one of the best investments that you can make in the stock market, but I do not have this investment as a retirement account. And so I'm going to tell you exactly why I sold some of my VTSAX stock and what it is going to be used for right after this. So go ahead and hit that like button for me and let's get into it. Now, I have held this VTSAX index fund pretty much exclusively since 2019. I also have another about $26,000 in P&G stock individually that I've had for tens of years. But I've had VTSAX since about 2019, and I've never sold any up to this point. I've always just bought in increments. And what I usually did was put in money, that a percentage of my paycheck, windfalls that I received along the way, stimulus checks. Most of the returns that I've gotten from all of my real estate holdings over the years. So all of my single families, all of my apartments, almost all of that money has been reinvested into VTSAX over the years. And so lately we have gotten rid of all of our single family and apartment, multifamily style rental buildings, and we have gone to a short-term VRBO Airbnb business model for our rental business. And what we have done is we have taken that money and we have invested it into these rentals in the Gatlinburg Pigeon Forge area. That's where we are concentrating our initial efforts on this, and the home values down there are quite pricey. I put out a video that gave a quick tour and some quick financials of the first cabin that we purchased in Gatlinburg, and that went for $525,000, and it's about a 1,200 square foot cabin, and I'll put the link to that somewhere up in here. And when we originally started out to buying that, we did our numbers. We basically looked at things from what would $5,000 a month gross income look like on that cabin? And when we looked at all of our expenses, we came up with right about $3,000 of expenses, including mortgage, all of the utilities, landscaping, etc. And then we took our 30% that we take out of, and by we I say me and my business partner, and we take 30% of the gross and split that between the two of us, and that's another $1,500, leaving us with about $500 that we can keep around for capital improvements or replacing things or whatever. And that was kind of just like our bottom line numbers for if that would work or not. And that is what we did this off of, and we went ahead and bought the place. Now, what I didn't include in there, if you didn't notice, is cleaning fees. And those cleaning fees I didn't include in those numbers because they are paid for by the guests exclusively, and that's passed straight onto the cleaner. So when I was doing my initial math, I really didn't include that in there because it ends up zeroing out at the end. So we bought this building, and it's doing extremely well. We had counted on $5,000 a month of gross income. We did about $5,000 in gross income in like our first 2 weeks listed on VRBO and Airbnb. In the month of July, we actually cleared about $10,000 or so in gross rentals, and the months after July are just looking as good, probably not as good as July is going to be, but August, September, October are all booking up at a very quick rate. And I have raised my rates 3 or 4 times from the original rates that I had put in place that were going to be our baseline numbers for this building anyway. And so the too long didn't read version of what you have just watched is that things are going much, much better than we had originally intended or really ever hoped to achieve. And so that brings us, I don't know, a month and a half down the road. Everything is going well, and we have said we want to do this again as soon as possible. We want to get more money coming in as soon as possible, because when I look at this over a year-long basis, I think what each partner is going to be able to take home on average is about $1,000 a month out of these buildings. And so you can quickly come up with a formula of, if you want $3,000 or $4,000 or $5,000 a month passive income from short-term rentals, you need that many buildings at about $500,000 of purchase price each. But what we decided was that we were going to go in and purchase another building just as soon as we possibly could. And with the money that we had gotten from the sale of our apartment building, we had spent quite a bit of that on the purchase of the $525,000 cabin. Now, what we need to do on this second building is we have to actually put down 15% down for a investment loan, which you can do 15% down investment loans, and that's a thing that you can do. A lot of people think you can only do 20% down investment loans, but 15% is a go. And so what we need for this building, because it's going to cost, the purchase price is $469,990, and so the down payment is just over $70,000. But we also need to consider fees for the loan. You know, there'll be loan costs, there'll be closing costs, and we'll probably be into this somewhere between $75,000 and $80,000 before we start doing renovations to the property. Now, there's not much that needs to be done to the property. We just need to do essentially some updates and just things to make the property pop so that it does just as well on Airbnb and VRBO as our other one does. And those things we budget for like $5,000 to $10,000 more dollars. So obviously when you start looking at this, those dollars that I just laid out for you and the $80,000 or so that we have left in our account, we would run out of money somewhere, not have enough for reserves, not have enough to pay our capital gains tax from selling the apartment building, moving that money over to the new building. And so what we had decided to do was put in $15,000 each of our own money for $30,000 total. And this is where we get to the part where I tell you about selling my VTSAX stock. So as most of you probably know, and I've had this comment a lot in the comments, I don't use the VTSAX through my Vanguard account as any type of retirement fund. I don't have it in a Roth. It's not in a traditional IRA. And I get a lot of people when I said that I put in like $35,000 all at one time, or I put in like $10,000. Like, well, how can you do that? Because it's over the Roth limit. There's always questions about what I am doing with this. And the thing is that I use my VTSAX account as a long-term savings account, because if I would stick my money into a savings account, I am guaranteed to lose at least 3% a year to inflation on average. And with the massive amount of money printing that has gone on, I foresee inflation to be much higher than 3% in the coming 5 to 10 years or something like that. So when I looked at these two investments, I looked at the house that we were going to buy, and it should provide me about $12,000 a year, or about $1,000 a month on average of income. And that was going to cost me out of pocket $15,000. Now, obviously it's going to cost a lot more than that, but that is money that we have already made from the sale of other buildings, from rental on the other buildings. So I already just consider that money I like sunk, or just, it's just essentially play money. It's the business's money, and it doesn't cost me a thing. So when I looked at that $15,000, it's in VTSAX, and in VTSAX you can count on getting the historical average of about 10% over, you know, all of history. Now for that entire $116,000 with the P&G stock as well and the VTSAX, I would be looking to get about $11,600 a year in valuation and dividend returns total for that account. For that $15,000, I'd be looking at around $1,500 of new money, of growth, of dividends. And, you know, that's not too shabby for doing absolutely nothing at all. But when I take that money and I put it into this new house venture, then it becomes $12,000 of income, plus appreciation on the building, plus note pay down, plus tax advantages such as depreciation and being able to write off all of our business expenses all year to bring down that level of income. For me, it is a no-brainer to sell that small amount of VTSAX stock in that index fund in order to make this deal happen, because I'll still have what, $100,000 invested in the stock market, and that should still throw off about $10,000 a year in gains in dividends and growth. So by selling off that $15,000, taking that $1,500 a year hit, I have increased my passive income from $11,600 or so for just that VTSAX to $22,000 for the $100,000 invested, plus the $12,000 from the additional rental building, and then that doesn't even take into account the $12,000 for the other building that is already in operation and making me money. So there you have it, guys. That is why I have sold some of my VTSAX stock. This is one of those things where I don't think that you should ever get too emotionally involved in the investments that you make. Like this VTSAX is your little baby and you can never sell it, because there will, and there might be, and there probably will be other investments that come along that could have greater returns than the investment that you've had. If I find something else that can make even greater returns than these short-term rentals can, with the minimal amount of effort that I have to put into it, I'll probably sell those and move on to the next thing. In the same fashion, there is a good chance that I will end up using more of this VTSAX money in the future to buy more short-term rentals in probably the very near future. Now, the flip side to that is that when I get this money coming in from all of these short-term rentals, there is a high likelihood that I am just going to put that right back into VTSAX. And if you have a building that's throwing off $1,000 a month, your $15,000 withdrawal from VTSAX can be replenished in 15 months. So as long as everything goes as planned and the things don't go to heck, which they could, but that is one of the risks that you have to take in order to make it and grow your wealth and really achieve success and financial freedom. You got to take some risks here and there. So guys, I appreciate you guys watching. I'm going to have a lot more coming out on this short-term rental investment strategy that I have recently undertaken since about the beginning of 2021. So I want you guys to be sure to subscribe so that you don't miss any of that, because it's crazy exciting and it's a lot of fun and it's a lot less dry, I think, than just stock market investing or just investing as a landlord or for single-family homes and apartments and what have you. I appreciate you guys watching, and I will see you guys in the next one.